Joining us live from the CME Group is John Brady of MF Global. John trades fixed income futures and treasuries. Also with us is Michael Cuggino, president of Pacific Heights Asset Management. Its $8.2 billion permanent portfolio, which holds stocks, bonds, and commodities, ranks in the top 3% of its peers year to date and over the past 5 years. Gentlemen, thanks for joining us. Let me start with you, Michael, and just talk to you a little bit about this Adobe news. Julie was telling us about it in the last block. It's interesting that Microsoft, Steve Ballmer, may even think about buying Adobe because of, obviously, the big controversy dealing with Apple and Flash. You know, Steve Jobs doesn't have Flash on the iPhones. It makes life a little complicated for a lot of people, but it seems like a hardcore rivalry, and that's why the Microsoft tie makes it even more interesting.
Yeah, and I think we need to see how this all shakes out. There was talk a few years ago of these two firms getting together and trying to do something as well. So I think we're still in the early stages of anything. Let's wait and see what happens. But, you know, it's a dynamic sector, technology and software, specifically in light of what Apple's doing. It's making everybody rethink their business strategies, Microsoft and Adobe included.
Hey, but, you know, Michael, is it kind of, I mean, potentially, is this a way of Microsoft neutralizing Apple at this point, who's really been trying to edge out Adobe?
Well, I think it's another battle in the overall war. And so, you know, it's one of these things where really it's tough to speculate at this point. Two very successful firms on their own. I mean, trying to put them together, trying to maybe put parts of their businesses together to compete against Apple. You know, that's what everybody's trying to do, so let's see what happens.
Hey, John Brady, let's bring you into this. I mean, I know you don't necessarily cover Microsoft Adobe. We know that. But, I mean, it's kind of interesting to see some of the moves that are being taken by companies at this point in what is, you know, a tough environment. I mean, what do you think?
Not a tough funding environment, though, is it, John?
Not at all.
Right. No, I think that's right. I think with Microsoft specifically, they're so cash heavy. They're looking to earn some type of return on that cash. You know, they've been a little bit stingy in terms of dishing out dividends to their stockholders. They have quite a bit of stock already within Treasury. So looking to put capital to work, cash to work in this tough economic and financial environment probably makes sense by going out and doing it via acquisition. So I think it shows the maturity of the industry a little bit, but also the need for Microsoft to spend some of the cash on its balance sheet.
Yeah, and I'm thinking it's got to kill maybe Microsoft a little bit. That stock's down about 19%. It's a what? $212 billion market cap. But take a look at Apple, up about 37% so far this year with a $264 billion market cap. You know the story. We've been covering it a lot in terms of Apple's significantly growing here in terms of its size, especially when it comes to their market cap and share price.
I mean, Alcoa is interesting in that they're beating the earnings estimates, and we were talking to some investors for the last couple of days saying we don't expect much from Alcoa. They never do terribly well, but they beat both on the bottom line and the top line. What does this say to you? Is it a global growth story?
Well, I mean, we've always been believers in the global growth story, so I'm not surprised by that, nor am I surprised that most of Alcoa's growth and consumption is coming from overseas. Makes perfect sense. I think it's a pretty good report, though, you know, coming out of the gate in Q3. I would agree also that we're going to get mixed reports. You know, the Micron story about mixed results versus Alcoa's positive results, I think that's going to be the story somewhat throughout the quarter. But the good thing about Alcoa is we were expecting probably lower earnings based on softer aluminum prices. Aluminum hasn't kept up with some of the other commodity prices, so apparently pricing was stronger than we thought. And also the expectations going forward, both on the demand side and the pricing side for Alcoa, bodes well not only for that company, but for commodities and global growth in general. So I'm very encouraged by it.
Hey, John Brady, so we got Alcoa today. We get GE, what, next week? We get JP Morgan next week. Are those the numbers that you're going to be more closely watching, or does Alcoa say something significant to you today?
Well, Carol, Alcoa's significance today, I would suggest that probably part of the surprise has to do with foreign exchange translations and transactions by Alcoa. Certainly they will benefit from the lower slide in the dollar that we've seen over the last couple months and quarters. You know, earnings season is going to pick up, as you suggest, and there's a little bit of concern by some traders about what the banks and financials will show in terms of earnings growth and expectations. You know, it was a relatively slow third quarter in terms of trading volumes and revenues, but also this story about net interest interest income and net interest margin beginning to shrink as we've seen compression along the Treasury curve may likewise affect bank earnings. So as S&P sort of trade up near the 1155, 1150 area or so, and they seem to be in a range between, let's say, 1170, 1130, if we get a good number tomorrow and S&P's kind of stab a little bit higher, we may want to take some chips off the table ahead of financial and bank earnings next week.
Let me ask you a question, not to downplay the importance of this news, and obviously anytime Microsoft wants to buy a company, if they do want to buy Adobe, it's hot. But honestly, John, how much do you care about any of this, given the Fed's quantitative easing trade sort of coming through the terminal here? I mean, does that blow everything away for you in terms of importance as an interest rate trader?
Well, you know, Brian, in many ways it does. You know, it's been extraordinarily difficult. We're seeing yield compression. We're seeing coupon compression along the Treasury curve. A lot of volatility and option models have to be repriced and restructured to reflect the compression that we're seeing along the coupon and yield curve. So the trade is rather difficult in fixed income land. You're right. The Fed most likely is going to initiate some type of QE2 at the beginning of November. So for bond traders, there's going to be a lot of waiting. We would suggest to clients that perhaps a lot of the QE2 news is built into current pricing. We do have an unemployment number tomorrow, which may be a little bit on the softer side, but really QE2 is not going to be much of a surprise. And what would be a surprise is if 10-year yields can maybe hold the 235, 240 yield level with about 3.5 long weeks to go until that Fed meeting, with a pretty quiet economic data calendar next week, and of course maybe some reopening in supply. So I don't know, right here it's tough to play treasuries from the long side, we think.
Hey, Michael, it's Julie. Just very quickly, when you look at jobs, earnings, potential QE, what are you weighting, sort of how do you weight those factors? Just quickly here in about 30 seconds.
Well, I don't think we're going to get any surprises tomorrow, and with QE2, I think the QE2 is probably baked into what we're seeing in economic performance and asset price performance right now. You know, I'm in the camp that QE2 is unnecessary. It's going to have marginal benefit, and I'm a little confused with the Fed on one hand saying that monetary policy can only do so much, yet on the other hand continuing to pump the system with money that's only sitting on the sidelines with no velocity. I wonder whether the Fed's energies are better spent whispering in the ears of our policymakers.
We got to run. Michael Cuggino, John Brady, thank you guys so much.